am I okay if I make the minimum payment on my credit card? Interest is accruing on any balance that you maintain on your credit card. You will be accruing interest rapidly if you have a high balance and you're only paying the minimum payment. How do you get financially free when you carry a large load of debt? How do you get financially free when you're only paying the minimum payment on your credit card? The minimum payment is there to make sure that you are paying something and not simply charging your card and deferring payment indefinitely. But the minimum payment certainly will not allow you to pay off your card. In fact, interest will continue to accrue on the balance that remains on your card after you pay the bill. First of all, using your credit card is a loan. It's an on-demand loan to buy goods and services. In fact, you can buy anything you want with a credit card, whereas the other loans are going to be secured or have certain things that you can purchase with that money. Whereas though a credit card, you can purchase anything that money can buy. So you can buy food, you can buy clothing, you can buy vacations, none of which have any residual value, none of which are secured by an asset. So when the bank extends this loan, it is a very risky loan. There's no security for that loan. So the only way they're going to make money and cover any losses is to make sure they charge high interest rates. Think about it. If you want a mortgage and you go to the bank for a loan, the bank is going to look into your finances to be sure not only that you can pay the mortgage payment, but that the collateral is appropriate and sufficient for the loan. So when you get a mortgage, you can't go and spend the money on just anything you want. You have to spend the money on a house, on real estate. The bank wants security. The bank wants collateral for the money they are about to loan you. And they're still going to charge you interest. But the thing is, they have a secure asset that they can then go after if you fail to pay back the loan. Credit cards aren't quite like that. Credit cards are not secured by anything except your word and your assets that they could sue you for, but really it's not secured by anything. So the interest helps with the security to the lender so that they can recoup money in real time, but also spread their losses over a number of people if they default on the loan. So consider this. Interest works in a compounding way. Compounding is one of the phenomenons of the natural world that can't really be explained, but it is a phenomenal process when you watch compounding happen. Take $100. Say you charge $100 on your credit card and you have a 20% interest rate. Well, after one period, you will then owe the credit card company $120. But that $20 is only a function of the initial $100. In the next period, you're going to owe interest on the $120. So what happens is they actually start charging you interest on top of the interest. Think about that. So you could be paying $200 for a sweater that you bought last year if you don't pay it off in time. You just keep doing the math. 100, 20%, now you're at 120. Well, what's 20% of 120, right? So now that's 24. So now you have $24 on top of 120. Now you're at 144. And then take 20% of 144. And you can see how quickly interest compounds on itself to charge you interest on the interest. You want to avoid this at all costs because this is detrimental to your financial future and to your freedom. Also, consider what you're buying on the credit card. Are you buying items that are no longer in existence, like drinks at the nightclub, food, clothing that you're wearing for a day or two that has no residual value, gas, other things that aren't beneficial to your long-term health and success? Nothing that you can then put put your hands on and sell or continue to use to get benefit from and value from, if you're purchasing things that have a rapid decay in value or literally disappear, like food, gas, drinks, vacations, it's not a good idea to put it on your credit card. A credit card is a tool. A credit card is a tool so that you, one, can take advantage of a bank loaning you money on demand anytime you want. Also, it's a tool so that you don't have to carry around a wad of cash to purchase the things that you like to buy. If you walk into a store one day, which I have done this, if you walk into the store, into the Best Buy, and you decide you want to buy a computer, well, you may not have $1,500 or $2,000 in your pocket. It's great to have a credit card company front you the money, and then you pay it back at the end of the month. There's no interest associated with that transaction. There is no penalty associated with that transaction. In fact, the only person that benefited is you. Now, sure, the credit card company benefits some because the merchant pays the credit card company to accept that credit card. So the credit card company is making money in a lot of different ways. The credit card company charges the merchant a fee so that they can accept the card. The merchant is happy to pay the fee because they know if they take and accept credit cards, they're going to sell more goods and services. So even though the fee may be 2 or 3%, they realize that they aren't going to sell as much if they do not accept credit cards. And frankly, what happens is a lot of that cost gets passed back to the consumer. We're going to talk a lot about consumer spending. We're going to talk a lot about consumer power in the future. This is why you shouldn't accept anything from people who render services to you, because not only are they benefiting from being able to do business with you, but they also are benefiting from the ability to pass on their costs to you. But if you don't pay off your credit card, then the bank and the credit card company win again, because you're going to pay them interest on the money that you spent last month. And if you don't buy something that has residual value, that has a life of use, then you simply just threw money down the drain by putting it on a credit card, which means you took a loan to buy food. That food is now eaten, digested, and it does not exist anymore, but you still owe the credit card company for that food. And you're going to owe interest on that money if you don't pay off that food. So you're digging yourself a big hole if you are not acting prudently and responsibly with your credit card. Only paying the minimum payment on your credit card is detrimental to your financial future. And it's probably a sign that you can't afford what you are purchasing. And eventually it's going to come to a stop, because the credit card company is only going to extend so much money to you. But until that day, you have to realize that if you can't pay that card off within the month billing cycle, or maybe the next month, if you have some type of income that is not prescribed in every 2 weeks or so, then you should probably rethink your purchases if you're having trouble paying off your credit card bill, because now you're going to have to pay off the interest associated with those credit card statements and the interest associated with those credit card purchases.